Hi, this is Lauren Jurgensen. I'm a mortgage advisor with BECU, and I want to welcome you to our last home buying session. This one's on home lending and your step-by-step roadmap. I'm so glad that you stuck in here with us for the BECU 2022 Member Summit. So we have a lot of information to cover, and I'm hoping we can cover every single question that have been residual questions from the last two sessions to make sure we have addressed everyone's concerns or information needed. So when we're talking about our road map to lending, there are many things to consider. We've already talked about the pre-qualification. We've discussed the fact that it's not an approval, that it's an estimate only, and there are no fees involved in the pre-qualification process. But we do want to remind everyone, getting conditionally approved is your highest priority. You are actively shopping, even if you're just doing it online, you will actively find. So be proactive and get conditionally approved. To be conditionally approved, remember again, we want you to consult with a mortgage advisor. You will be submitting your application, which means we will be taking a hard credit pull from all three credit bureaus. We're going to verify your income and your assets. So those are the funds for the down payment and closing costs. We'll submit the file to underwriting, and the underwriter will do a full review. They're going to approve or decline. We're going to count on the approval process. And then that conditional approval is valid for 90 days, which we had previously stated. It's tied to your credit report. Your credit report expires after 120 days. So we have 90 days to shop, and that gives us 30 days to complete a transaction once you're in contract. So that's the conditional approval process. Now, the transaction timeline. Basically, when we're doing this transaction timeline, I want us to be mindful. We need to get conditionally approved. That's part of the timing element. The conditional approval, how quickly can that be done, is going to be highly dependent on how quickly you're willing to start the application and how quickly you are to provide the documentation that is needed for that approval process. This gives us kind of a recap of once our contract is presented and accepted. So it tries to give you a timeline over a month period of time of how things could potentially work. You'll notice that in this particular scenario, the offer is being accepted on a Sunday, and then the home inspection is being ordered. So remember, the home inspection, your real estate agent is the one that's going to help you assist with that. Typically, they have multiple home inspectors that they've worked with in the past, and they're going to find one that's going to be able to get that inspection done within the next few days, because you want to have that completed early. Then you're going to notice that once your contract is accepted and you have a purchase and sale agreement, we as a lender, we want to have that right away. We want to get your file back into underwriting, make sure all of your documentations are updated. We want to talk about locking in your interest rate. You have specific numbers of days to get your earnest money to escrow to secure that transaction. So you're going to notice all of these timelines. Though that first week is very, very busy. So we're going to hurry up to patiently wait. Once we've done those things, we are going to order the appraisal, and that's going to be the element that we're going to wait on. In this particular scenario, it has the appraisal being ordered like almost 2 weeks out. That is not the case. On a purchase today, we're going to order the appraisal straight out of the gate because we want to move up our timeline for closing. Typically, I'm always going to ask for a 30-day close, and I want the agent to specify 30 days on or before. So if we have an opportunity to close early, and if that has value to the agent and the seller, we want to do that. So these are things. The other thing that I want you to be mindful of is when you're in contract, to make sure we have updated documents, but also to start shopping for your home insurance, right? You're going to contact whoever you have your car insurance with. You're going to let them know you're buying this property and you're going to obtain a quote from them. You need to share that information with us, the lender, because that's going to be part of your DTI, debt to gross income, for approval. So it all goes in this particular situation. It says the escrow, the appointment is set. It talks about when your closing disclosures are sent out. All of those things are very specifically time driven in the process. We do want people to recognize that the signing day is not your closing day. With BECU, we want you to sign the day prior to your closing date. We don't want to feel pressured at the very last minute to sign and close the same day. So usually your signing day is going to be the day before, and then we are going to fund and record the following day. So once we fund and record and recording numbers are received, your agent is going to provide you with keys to your new home because it is now your property. So this is a very general timeline, but I'm hoping that you guys can see it well and let you know how that goes. And be sure to ask questions as we move forward. This is the section here where we are open for questions. Gay and I are both here to answer any of your real estate questions. We can talk about timing issues, any of those things, to share the moment and to make sure that you feel fully informed. So Ruth is our room host, and I'm hoping that she'll join us with Gay and we can see what questions there may be available.
Hi, everyone. Thank you so much, Lauren, for that synopsis. Really appreciate it.
It was easy.
That's a
Now
good
we just need to know if people have questions to share with us, right?
Yes. Yep. One question that came in was in this market, how many days from applying for the loan to getting the keys to the house does it typically take, right? Do you see, is it taking less time, taking the standard time, or what exactly are you seeing?
I'll take that one. From what I'm in my experience, it varies widely by individual. Sometimes I will show houses to a person, I will show them 5 houses and they'll buy the fifth one. Other times I will show them houses for a year and they don't buy anything at all. So it's highly, highly individual depending on each person. If you are able to find something that you really like and put in an offer and get it accepted, then you could be in your own new home in 30 days. So it's very individual.
Thank you. Oh, go ahead. Lauren, did you want to say something?
No, I was going to say, Gay, you just answered that just perfect.
Oh, thanks.
Perfect. What is the difference between an inspection and an appraisal? I know that a lot of people get those two kind of terms mixed up a lot of times, or that's a usually typical question we get. So can you explain the difference between the two?
Shall I take that one too, Lauren?
So I want you to respond to the home inspection and I'll talk about the appraisal.
Absolutely. There you go. So an inspection is an individual who is an inspector, a professional person. They come into the home and they are going to look at every aspect of the house. They're checking out the roof, they're checking out the exterior, the siding, they're looking at the plumbing, the electrical, the foundation, in as much as they are able to, and opening doors and drawers and checking out water and all kinds of things. They are looking for what might be wrong with the house, because you already know what's great about it, what you like about it, because that's why you want to buy it. They are there to show you underneath the skin of it, so to speak. They're looking for things that might be going wrong or be old or on their last leg or needing to be replaced, that type of thing, just so that you can go into this transaction eyes wide open, knowing exactly what you're getting into. Now, in appraisal, on the other hand, Ruth.
Well, that comes to me. I get to talk about the appraisal. But I love what Gay said, though, because that home inspection is really all about that deferred maintenance, right? So that you as a new homeowner have an understanding of where your expenditures might be going, right? Because if your hot water heater is on its very last leg, that may be something you have to deal with. So that home inspection is very important. Now with the appraisal is actually for the lender. It's all about documenting in your loan or mortgage file that that property is sufficient collateral for us to lend against. So the appraisal gives us basically what we perceive as true current market value. And it also outlines comparables in the area. So it's something physical in your file that documents the value of that property. So the difference between the home inspection is for you, the new homeowner, so that you know what may be coming up, those deferred maintenance issues. The appraisal is for the lender. Okay, Ruth, I lost audio.
I think that was on my end. Sorry about that.
There you go.
Thank you. Can we move up the close date if the loan is moving faster than expected?
Absolutely. I totally want to do that. It's really a matter of the meeting of minds, right? Because of the fact that lender has to have all their information together. We have to issue the closing disclosure. There is a federally mandated 3-day review period prior to an individual signing those loan documents. So there's multiple stages and steps to the process. But if we have both parties or all parties, let me rephrase that. If we have the lender, the buyer, and the seller that all want to move up that closing date, we absolutely are willing to do that.
And then can you get your earnest money back due to the inspection, one person was asking?
Yay, that one's a good one for you.
If you have an inspection contingency in your offer, which doesn't happen very often these days, but if you have an inspection contingency and the seller accepts your offer along with that inspection contingency, you have an inspection and you don't like what you see on that inspection, then yes, you do get your earnest money back. That is the most commonly used form to get earnest money back that there is.
Another question we had, which was a good question too, is how do you choose a good real estate agent?
Say, Gay, tell us about that. How do you choose a really good real estate agent? What are the things you would be looking for?
You're looking for somebody that's got some experience. You're looking for somebody who has your best interest in mind, because that person is your guide through this whole process. So that needs to be someone that is trustworthy, someone who knows what they're doing, someone who has availability, someone who answers their phone, who responds to your emails in a reasonable time frame. Just somebody that you feel comfortable with and you feel like you can move forward with them in the biggest transaction and expenditure in your whole life. So
true. Oh, go ahead, Lauren.
Oh, I was going to put a plug in there. I have to tell you, your real estate agent, so many people think that the real estate agent's responsibility is to just take and show you homes. They do so much more than that. And having a strong agent that is knowledgeable, informed, and experienced is going to make a world of difference about whether your investment for that property is going to truly be a positive experience for you. So a real estate agent, I think they're going to be your strongest advocate, but you want one that's going to be very direct with you, because you want someone that's going to say, no, run away from this house. It's not going to be a good fit. Or if you love this property, just recognize it's going to cost you another $50,000 to $100,000 to maybe bring it up to a standard that's really acceptable. So you will want an agent that's going to be honest with you in regards to the property that you're looking at and whether or not it's really going to suit your immediate and future needs. So I'm just going to be a strong advocate. Those agents are so important as far as the transaction is concerned.
Great, exactly. Very, very important. I can definitely attest to that. Can you remove PMI early? Another question we had.
I love that question. I had someone, oh my goodness, today's my day. I had a member that literally called me yesterday and left me a voicemail message and asked. He said, Lauren, you reminded us that after a 2-year period, we may have an opportunity for our mortgage insurance to be removed. So, yes, BECU does allow for mortgage insurance to be removed on our conventional loans. So, you just need to be mindful when you're dealing with a lender, always ask what their policy and criteria is for mortgage insurance removal. If you happen to have an FHA mortgage insurance is for the life of the loan for FHA. So it's going to be there regardless of how much you pay down on your principal. Now, conventionally with BECU, we do allow mortgage insurance to be removed, but there are specific criteria that comes with that. The first one is we want 24 months of positive payment history. So you just need to be mindful you're making that payment consistently on time for 2 years, 24 months. I tell people it's like we are in a committed relationship. Mortgage insurance is literally an insurance for the lender against potential risk. So we want to know that you are faithful and consistent in making that payment. After 24 months have passed, you could at that point request to have mortgage insurance removed. But you need to be mindful at that point to request for mortgage insurance to be removed. You need to be at a 75% loan to value, and it's the value at that period of time. So you're using property appreciation and the pay down of principal to accomplish that goal. BEC will need an appraisal at that point of time because we have to document in the file the reason or justification for mortgage insurance to be removed. So I always tell people, mark your calendars for that 2-year mark. Look to your left and right, see what your neighbors' homes are selling for. Those are all good criteria whether mortgage insurance could be removed.
Wonderful. Thank you so much. Another one, what is the single most avoidable mistake you see that people make as first-time home buyers? I think that can both of you could definitely answer that in terms of your perspective for
Go
sure.
ahead, Lauren.
Oh, I could start. Oh my goodness. Yes. So the single most I'm going to tell you, I think the most avoidable mistake is for you to not consult with your mortgage advisor early in the process. I want to talk to you when you have that small seed in your mind about home ownership, because there are so many things that we can talk about and be prepared for that acquisition. We can talk about down payment. We can talk about your credit report. We can talk about your income and your employment stability. There are so many things that we can bring into that conversation. The other thing is, I want people to talk about your credit score is really, really important, but your level of liabilities or debt that you carry is also something we need to discuss. We may not want to pay off that car loan in advance because maybe it's helping to boost our credit score, and we can always condition for it to be paid at closing. So talking to your mortgage advisor, to me, that is your number one priority. And it is the biggest mistake people make, is the fact that they go out there and actively shop for a home and they have not had that time to get proper counsel. So Gay, what about for you?
My buyers don't make a whole lot of mistakes, I got to tell you that. But I think that hesitancy is a big issue. If you want to see what's next and what's the next house and the next house, and you don't make up your mind, you can't make a decision, you might lose out on a house entirely. So indecision, I think, is a big mistake. So I'm sure of that.
Good advice. Thank you so much. That's very good advice. Another one, is it okay and is there a way to get pre-approved from with multiple lenders at once for a home loan?
You can. You absolutely have the choice to do that. I don't know that there's value in doing that, though, because of the fact that when you're getting conditionally approved, you're getting approved to know that a lender wants to give you a mortgage, right? You, the buyer, are approved. You could have 5 approvals, but once you find property, you're only going to go with one of those lenders. So if I have 5 approvals today, but I don't find property for 3 to 6 months or a year, what value has all 5 of those approvals done? The seller doesn't care, right? So usually I'm going to encourage people to work with a lender that they have confidence in, a lender that they feel is ethical and moral and there for their best interest, not for the lender's best interest. So look for a lender that you have a relationship with. That's my first element of advice. And if you have a relationship, say with 1 or 2 lenders, just go through the approval process with 1 or 2. Sometimes I know I've had members that have applied with their bank, right? And then they've come back and said, oh my goodness, the condition list is so long. Are these really valid conditions? And BECU may or may not require the same thing. So it's always good to have that discussion or conversation. But usually I'm going to encourage you to stick with the lender that you have the most trust and confidence in and move forward with that. If, when you're ready to get into contract, if you really feel that that lender's interest rates are not competitive, you have an opportunity at that point. You can apply with another lender if you choose. But I do know that BECU, our rates are very competitive in the market, and we're very aggressive at our approach. So I think you should have
Wonderful.
confidence in what we have to offer.
And the fact that BECU does not have expenses at the end, it doesn't have costs, is really, really great too. That's very helpful.
Thank you very much. And how much time will it take to get a pre-approval letter to start shopping for homes?
To me, that's wholly dependent on the member. If you're dealing with a mortgage advisor, they're going to do everything they can to get your application submitted to underwriting as quickly as possible. But if there are 1 or 2 documents that are missing, that file's going nowhere. It's just sitting on that mortgage advisor's virtual desk. So if you have your documentation prepared, then it makes the mortgage advisor's life so much simpler that they can submit it to underwriting right away. So if you're prepared, you have all your information, then usually I encourage people probably think about 5 to 7 business days is kind of the norm. Now, if you have an unusual situation, if you're self-employed, I want you to be prepared that that process may be more extended because you have more documentation that's going to be required. So it just depends. W-2 employees, super quick, super simple. But it really does depend on how engaged the member is with the mortgage advisor to get it submitted to underwriting. So I have had people, I had a couple that right at the moment they were in a big push, right? They had property that they were interested in. And so they did everything that we needed to do. And we got them into underwriting so we could get them an approval letter to make an offer. But again, if we can avoid those type of fire drills, right? Let's do that. Let's be more prepared in the process and get conditionally approved early, not at the moment that I have found property and they're reviewing offers tomorrow, because that's a challenge.
Speaking of conditional approvals, one person was asking, what happens if you get a conditional approval but don't find a home within the 90 days it's good for? What are their options with that?
Oh my goodness, that's the simplest approach. I have to tell you, it's easy pleasy. So what happens, the reason we have that 90 days is because of the fact that in theory, your credit report expires after 120 days. So I want you to know if you find property after that 90-day mark, right? Let's say we find property and we get into contract on day 96. I just want you to be mindful. We're going to need to pull an updated credit report because your prior report will expire prior to closing. So you need to be aware. We want to make sure your credit report that there are no significant financial changes in your credit score because that can impact your approval. So that's what would happen is if we got past that point, you found property, we're going to pull an updated credit report, update your documents, and we're just going to keep moving forward. Now, if we get past that 120 days and your report has fully expired, but you are still actively looking, well, then at that point, we just want to rekey a new application and pull a new credit report and update with new documents. And you just continue to move forward with the next 90 to 120 days. So it's not difficult. Many people do wonder whether or not their credit score will be impacted at the time that we have to repull. Usually for a mortgage inquiry, though, the credit bureaus do recognize that it's a mortgage inquiry, not a credit card inquiry. So the impact to your score is significantly less. And usually your credit score is definitely impacted or affected by your payment history. So if we're pulling your credit report in another 90 to 120 days, usually your score will be higher unless you've gone out there and applied for other multiple levels of credit. Does that make sense? I hope. So,
Yes,
yeah,
definitely.
so it's really simple. It's not complicated. Your mortgage advisor is going to be with you through thick or thin. I've worked with members for literally for a 2-year period of time while they've actively looked, and we've done multiple applications together. So everyone just stays calm and we're going to get through it together.
Thank you so much. Another question is, if I own a home now but want a second home but don't have liquid assets but a lot of equity in my home, how could one go about doing this?
So if we have time for preparation, if you have a lot of equity in your current residence, go into a local branch and talk to them about a home equity line of credit, because then that could allow you to tap into that equity that you currently have in your property that you could use as an asset for a future purchase or some type of future investment. People use home equity line of credits for multiple reasons. Sometimes we wanted to have it in play because we have a child going to college. Sometimes we wanted to have it in play because we're going to do some home renovations, right? But also, maybe we want to have it in play because we do want to get out of the rainy weather and we know that I could have a nice little condo in Florida or Arizona
Right.
that might be of value to us. So, if you have a lot of equity in your home, I do encourage people to consider a home equity line of credit just to have those funds available. You may never use it, right? Maybe that never comes to fruition, but it is kind of there's value in having that as a financial tool available. But that would be a good place to start to begin with, is to get a home equity line of credit in play so that when future opportunities come up, you have access to that equity.
Thank you very much. That's very true. I love that idea. And then can we, sorry, one person was asking, can we purchase a home from a family member at a discount and utilize that equity to avoid PMI? Is that possible?
So you can do that. And I think it's so charming when we have grandparents or parents that say, we want to pass the family home down to you and you get to raise your children here too. So in those type of situations, basically the family member, the parent or grandparent that is selling you the home, they are selling you that property, but they can also give you a gift of equity for your down payment in the process. So I think there's value in that. Again, if that's something you're considering, I do want you to talk to your mortgage advisor to be part of that conversation. But a gift of equity is perfectly acceptable from a family member, a parent or grandparent that is selling you that property.
And kind of actually going along with this one, another question came in is if my parents are willing and able to give me some funds to help me buy a home, can I use that toward my down payment?
Absolutely.
And
A
how do they
parent
go about
allowed
doing that? Oh, sorry, go ahead.
So no, it's okay. With BECU, I'm going to tell you that is the simplest thing. Basically, we have a gift affidavit that they're going to fill out and sign and say we are gifting our child X amount of dollars and we're going to provide it to them on or before closing. It's so simple. So we just need to know what you and your parents have come into agreement for, right? As far as what that dollar amount would be. And we actually listed on the application as gift funds as an asset.
Nice. And then what is the average time frame that one should be employed before applying? Like for instance, this person's saying they just started their job. What's a good kind of time frame to look at?
So the underwriters want to know what you've been doing for the past 2 years, right? And if you're a young person and you've been on your job
I've
for,
refreshed four
I'm going to
times
say,
and
90 days or
Mhm.
so, I want to know what you've been doing before that. I don't want to know that you've been sleeping on your parents' couch playing video games, because that's not a very productive use of your time. But I do have a young couple that are moving back to the Seattle area, and he has just finished nursing school and has an offer letter with Swedish Hospital. So we're using that offer letter for his approval purposes, because we can prove he's been working at a hospital at where he's attending college or finishing, and he has his transcript, his academic transcript, to prove to us that he has actively been going to school for the last 3 years for nursing. So we can get him from point A to point B. Now, if you have been without employment and you have been doing nothing, we want to know about that too. So sometimes we're looking for a letter of explanation of what was taking place during that season of your life. Was it just a short gap in employment, or is this an extended situation? So the length of time is very important, but we need to know what happened prior to that, right? Maybe you worked for the same company for 20 years and you got bored due to COVID and decided you wanted to start a new career. Well, then we want to know that. Maybe you've only been in this new position for the last 2 months. Well, we have continuity of employment or continuity of productive initiative through that process that we can connect. So that would be my advice. Talk to your mortgage advisor. They have lots of information. You get to share with them all the ins and outs. And the more they know, the better they will be able to provide you with counsel. So don't be shy.
Thank you. Thank you, Lauren. And again, I think this question is for you. One person was asking, I've heard of people losing out on cash offers. Is that still a thing?
losing out because of cash offers. Yes,
Mm-hmm.
that's still a thing that still happens. Um, Cash buyers may not come up with the highest price, but because they're cash, they don't have appraisals. And so that's a huge hurdle for a seller to overcome, waiting to find out if the house is going to appraise or not. So, but they still do happen. I've seen cash buyers come in extremely low, thinking that they're all that and a bag of chips because they have cash. But just know too that it's always cash to the seller at closing. You're getting a loan to pay the seller, but the seller receives the full amount in cash. So the difference most often is just because of the appraisal situation and the quick closing for cash. You can turn that around in 10 days, whereas it might take 30 days to close with financing.
Gotcha.
But yeah,
Thank you.
it's still happening.
Okay. And then another one for you actually is how does one separate their offer from all others that a seller may be receiving?
Well, that's kind of hard depending on how many offers there are. And but all you can do is the best you can do. Just make it really clean, really strong, and sometimes find out what the seller needs and provide those needs for that seller as best as you can, such as a longer closing date if they need to have time to move out themselves if they're buying a new place, or a short closing if they're moving to Florida, what have you. So you want to try as best you can to make the seller unable to resist your delightful and wonderful clean offer.
Wonderful. And I think we're on the last question. What are some of the things they can do to prepare to compete in this housing market? What should they be doing prior to submitting an application?
Submitting an application, that would be you, Lauren.
Well, prior to submitting an application, that's just talking to your mortgage advisor. You have to know what your finances look like and how you would be approved. Because if you don't have financing and you don't have all cash, you're not going anywhere. So I would have that conversation with a mortgage advisor to talk about what is needed, right? What would you qualify for? Not only what you would qualify, what do you want your monthly mortgage payment to be, right? Maybe you're going to qualify for a lot, but you're like, oh my goodness, I don't want to put every penny that I earn into my mortgage payment. I would really love to travel and spend time with family and friends. So having those conversations is really important. But the financing aspect of it, you're not buying a home if you have not secured financing. So that is the biggest thing to begin with. And I'm going to encourage you, if you're a BECU member and you love BECU, every single one of our neighborhood financial center has a mortgage advisor assigned to that particular branch, and they're more than willing to meet you in person, over the phone. We're very flexible depending on your schedule. So I would start there. The financial aspect is a high priority, because Gay cannot do anything for you if you do not have your financing secure.
Absolutely.
You can look online as much as you want, but you're just window shopping if that's the case. So
That's right.
Perfect. Hey, well, thank you so much for those wonderful questions. That's all the questions we have for right now. But thank you so much, ladies. Appreciate you coming
You're
in and
very
doing this
welcome.
presentations.
well, thank you for having us. And I think we
Thank you
did
very
really
much.
good on the time, and I'm super happy that people joined us. And go BECU, right?
Absolutely, absolutely. And we may not have been able to answer everyone's questions in the chat, but if you have a question you'd like us to answer, please go ahead and send it to communityrelations@becu.org. And if you scroll, you're gonna notice that there's a survey. Go ahead and take a moment if you wouldn't mind to go ahead and give us the feedback on the session, so we can gain the insight of what you thought about it. So this concludes the breakout session for tonight. Please join us for our closing keynote panel, which is going to start in about 5 minutes, and we look forward to having you there as well. Thanks, everyone, and thank
Good
you
night,
again, Lori
everyone.
Gay.
Thank
Appreciate it. Have
you.
a great night.
Good night, everybody.
Bye.